All right, so I welcome you all to the day one of Game Changer webinar session. This is being done for the exam attempt, which will be held in September 2026. By the way, the purpose of this Game Changer webinar session is to go through the entire exam first in front of you so that people may come to know that how exactly the exam appears in front of you. Then I'll be sharing the tips and tricks which are important for you people. You have to follow them while you are doing your exam, because this is something which are the biggest do's and don'ts of the exam, which you really need to keep in your mind while attempting it. So it's like this session is basically aimed at preparing the students of what they should expect from their taxation exam. My name is Sanya Asif, and I'm an expert tutor for TX and Advanced Taxation. Expert tutor is basically the designation given by ACCA Global. And here we have strategized how we are going to deliver this webinar, this 2 days webinar session, in which I'll let you know that what exactly the paper format of TX is, which things you need to keep in mind while attempting your questions, especially the ones related to section C. And then I will let you people know that how you would be presenting your answer in an appropriate manner. Then I will let you focus on the exam techniques, the tips, tricks of saving the time of writing down the maximum things in your exam, and especially the ones which are required by your examiner. Then I'll be sharing the list of important section C questions with you people, and I'll give you a plan that how would you structure your last 10 days before appearing in the exam attempt, right? And whensoever in this process, whenever you come across any problem, you need to drop your question in the dialog box. And once I get time, I shall keep on answering your queries. It's been over almost 20 years since I am in this field of teaching taxation as well as advanced taxation for UK. This is my WhatsApp number. You can coordinate with me directly in relation to the queries that you have for taxation. And by the way, this is the most important group link. I just hope that majority of you have already joined our global group, because all the students, whether they are enrolled at the portal of Wi-Fi or not, they are there in this global group. It's a group which is like open to all. Not necessarily you need to be a part of our virtual institute to get entry to this. You, whatever institute you are at, you may simply be a part of it. Let me just share the link with you people, if in case you haven't yet joined it, because there you will find maximum number of students who are in the same boat, who are preparing themselves for TX session. And it is saying that I can't paste the information here. I'm trying to send the link of global group here. It might take few minutes, and once it's done, I'll let you know, right? So global group is basically the group where you will find hundreds of students who are in the same boat, who are preparing themselves for September 2026 exam. So whenever you come across any technical issue, any general issue related to ACCA, you may drop your concerns in that group, and there are like lots of people who are there to help you out in every possible manner. Okay. So if you are already enrolled at Wi-Fi, then you need not to worry at all, because we are offering a specific link to our enrolled students. And there you may drop as many queries as possible. This is basically the note for the students who are already enrolled with us. The motivational statement, as far as all of your skills exams are concerned, TX paper has got the maximum pass percentage, which would mean that if you prepare for TX exam in the right way, if you're going to sit in the TX exam and you will be executing all the tips that I'll be sharing with you people, then you will surely be amongst those people who would get through this exam, who would pass their exams, and that's so with the flying colors. So just motivate yourself that despite the fact TX exam is like the one which has got a comprehensive syllabus, still it is that kind of exam which actually lets maximum number of students to get through. Okay, so let's first focus on that. What are the don'ts of your TX exam, and when what might go wrong? Why usually students get failed? Normally, if they are not going to complete their entire exam on time, when it comes to the bad time management, this is something which is like a grave mistake when it comes to TX exam. You really need to complete all the requirements, each and everything, because that's how it is going to leave a long lasting impression on the examiner. Let me just tell you that all those students who secure in between 45 to 49 marks, of course, examiner really wants to see that whether he can like give a sort of another go to that student. He would like to go through the questions once again quickly in order to extract 1 to 2 marks additionally, so that a person would pass his or her exam. But this effort of going through the exam once again could only be done by the examiner if he sees that you have attempted the whole of your script. If somebody has not attempted the paper completely, and for instance, he's gonna be failing at 49, examiner would not even like to give another glance to the exam. He would not like to go through the exam script again in order to like find out maybe one score further, so that a person would be considered as the one who has passed his exam. So you really need to complete your exam. That actually matters. And having said this, let me just tell you that whensoever question appears in front of you, of course, you can do any question in any order. So start doing the questions which find easier to you people. Do not start tackling the difficult questions first, because difficult questions are something which still remain difficult, unresolved, and they might be consuming a lot of time. And this is like going to cost you a lot of time, which could otherwise be utilized by you for the rest of the question paper. So what you have to do is you will have to keep a check of time in your head, or you may be like writing it down somewhere else, that as your exam is going to be of 3 hours 180 minutes, that mean that for the sake of like securing 100 marks, you have 1.8 minute to grab each secure. So if you are going to take a start with section A questions, which is all about OTs, every OT is carrying 2 marks. That would mean that approximately you have 2 into 1.8, that makes up 3.6 minutes. So approximately 3.5 minutes you have got in order to tackle each OT. So for instance, if I open up an exam and I come across the first question, and it is about, let's suppose, CGT reliefs. And for instance, if I'm not good at reliefs, and by the way, one should not say this thing because reliefs are something which examiner likes to test. So for instance, if my grip on relief is not that good, let's say, I wouldn't be wasting my 3.6 minutes on that question. I'll quickly jump to question number 2. Okay, so for instance, if question number 2 is about NIC and I feel too good about NIC, so I'll start solving it. There could be a chance that even I would not be taking 3.5 minutes. I will be completing it in 2 minutes. And that's how I'll be saving 1.5 minutes for any such question, which is like going to either take more time, or maybe the question where I'll have to think a lot. So time management is the key to success. You will have to take a start with the easier question. And that's how, by doing the easier question, and that's so within the time limit, or maybe completing before time, and that's how you are going to secure a secure time for those questions which are technical. But at the end, you will have to complete all the questions. It's not like that if you have left question number one in the start and you get done with the whole exam script and that is it, you are going to submit it. No, it's not like that. If you were not confident about question number one, even then you will have to give an answer no matter what. Even if the answer is correct, you have to complete your entire exam. And then, of course, poor technical knowledge, not knowing all the not knowing all the topics. This is like something which is humanly not possible. I mean, you cannot know each and everything, but you really need to have an idea of each and everything. There is like not even a single topic for which you would say that, oh, I have never heard about this thing. You should have at least a know-how of even those things in which you are not good at. So, for instance, if I start doing inheritance taxes and my grip is something like a little shaky about the residence nil rate band concept, but still I should know a little bit about it. Though I do not have a good grip over the concept, but still I know a little bit about the concept. So, my technical knowledge might be good in some areas. It might be like little bit on the moderate side for some areas, but it's like I should have covered all the topics. And if the students are going to cover all the topics, that's how they'll be able to at least answer all of the questions. And that's how they would be in a state where they will be not wasting much of their time. They will like straight away start solving their exam and they would get done with their exam within the given time period, right? Okay, so majority of your exam is relevant to computation, but you would find approximately 25 to 30 marks, which are spanning around theoretical things altogether, involving section A, B, and C. It's not always about calculating an answer. It is like going to test the theoretical, the descriptive version of your syllabus as well. And for instance, if you are given with section C question where you have to type the answer, and for instance, you are given with a question which is of descriptive in nature. For instance, if it is said that write down the conditions required for rollover relief, and this question is of worth 4 marks, then your number of points, the marks are very important in letting you people decide that how many valid points or to what length you are going to produce an answer. So if there is a question which is of worth 4 marks, you try to produce at least 4 valid points. If there happens to be any descriptive question which is of worth 2 marks, then you need to at least, or maybe more, but at least 2 valid points need to be written. So it's like whenever there happens to be any descriptive question tested in your section C, it's always the marks which will tell you that to which length you will have to go in order to construct your response, right? But of course, when it comes to computation, you cannot exactly ascertain it with the number, I mean, the statements or the valid points. Obviously, if it is said that calculate inheritance tax payable, lifetime IHT payable, then you will have to carry out all the steps which you need to show to your examiner in order to arrive at the answer. And by the way, I'm talking about section C because in section C, it is all about your workings which are going to be checked. You will be awarded marks for the correct number of steps, so much so if your answer is incorrect in the end, you will be awarded for as many correct steps as possible which you have applied in order to arrive at a certain answer. But yes, with section A and B, your answer would matter, and workings are something which you need not to show at all. Okay, so as your exam is going to be a computer-based exam, so you really need to have a sufficient practice of section C questions on practice platform at least. Okay, so let me just take you to practice platform for a minute or so. as I want to emphasize on few extra things as well. So this is United Kingdom, which is your variant of exam. Sometimes by the time people are going to pay for their exam entry, they ask that what variant we are actually studying. This is always UK variant when it comes to the session that I conduct. Okay, so there is the category in which you may find a lot of exams. Okay, let me just tell you that these are your past exam attempt, and this is something on which I have already emphasized much before, that not all the exam attempts which are there on the practice portal are relevant for you people. First of all, if you just look at UK specimen exam, FA25, this is the exam. This is the file which is like quite relevant to you people. You can open it, you can assign yourself, and then you can solve it and then see that to what length you have correctly performed it. Then when it comes to this TX UK September December 24 exam, no. This is an old exam attempt. Their questions are presented with old Finance Act, and so is about their solution. But you may find these questions in your latest kit. I usually prefer using Kaplan Revision Kit because in this kit, you will find all the maximum, I shouldn't say all, but the maximum number of past exam questions. And that's so in their adapted form, they have been changed according to the latest Finance Act. Then this is like another exam attempt about June 24. It's been a while since students took this exam, so it is no longer applicable on you people. And same is the case with TX UK September December 23 attempt. So apart from this, in the first line, apart from this specimen FA25 exam file, the rest of the three files are not relevant for you people. Okay, so in the second line, there is practice exam 2 FA25. Well, this is something which is quite doable. Then practice exam 1 FA25, that is also a doable thing for you. And this blank workspace, this is something which you may make use of to the maximum possible length. I mean, you just open your kit, find out a question that you want to solve, open this blank workspace and try solving all the questions, the selected questions on that blank workspace. And this is how, by familiarizing yourself with the interface of exam, by getting to know how exam actually appears, that is going to be very beneficial for you people. Because see, whenever we try to go somewhere, we usually open that Google Maps or any navigator tool and see for the first time we'll be using that navigation tool. Maybe we'll be using the navigation tool for the second time, maybe for the third time. But then if we just keep on going from to that place again and again, things will get like something which we have like learned totally. The things will remain in our minds as we have learned the ways, as we have learned the whole roadmap. So is the case with the exam interface. As many times as you are going to practice your question on the exam portal, that is going to let you familiarize with how the question actually appears, how you'll be solving it, when you're going to put a heading, in which cell you will have to show the whole calculation, how would the format work. So this is how, as many times you'll be like doing the same activity, things will become convenient for you people, right? Okay, so there is like another exam attempt. Well, this is like related to June 25. This is again an outdated attempt for you people. TX September, December 25. No, this is also an outdated attempt, but yes, TX UK June 26. That is something which is technically relevant to you people, and in today's session I'll be discussing some part of this exam with you people, and the leftover part of this exam attempt will be discussed tomorrow. So we'll be like covering this exam attempt. So altogether, this exam attempt that I'll be doing with you people, this is something which you can do apart from this. uh Practice exam 1, practice exam 2, and specimen FA25, these three files could be practiced. And a blank workspace is basically just a blank workspace, which is like actually making you people able to do as many questions as possible. And this is like gonna be supporting my statement that if you wouldn't have done practice on the practice platform, then things will be like quite obnoxious on the day when you'll be handling your exam. So you need to practice well, and the practice should be done on the practice platform. And especially you people have to take your mock exams as well. If you take up your mock exams, this is how you will eventually be developing a habit that how you will have to handle the whole of this 100 mark script, and that's so in 3 hours time period. Usually students fail when they do not focus on verb. So verb is very important, and this is like once again something which is relevant to section C questions when descriptive questions are tested. So technically, if it is asked to describe something or explain something, this is actually what they are wanting you to write down the statements. If they say that calculate something, then you will have to do the computation only. If they say state, for instance, if they say state corporation tax, I know the fact that corporation tax is something which is calculated. But if your examiner is saying that state it, it would mean that once you are done with the calculation, then in the end, you will be making one liner, I mean, one statement showing that what your corporation tax for the given accounting period is. So you really need to be vigilant for very small things, which are the commanding words, which are the verbs in your exam, because according to that, you will have to structure your answer. So these are the things which usually students, if they don't follow it, it tends to be resulting into an unfortunate thing. These are the reasons for why students fail, and you are not supposed to repeat these mistakes. Okay, so this is like something which I would like to specifically discuss for those students who are going to repeat their exam. All those students who had previously taken up their exam and they secured less than 45 marks, they really need to pay attention to their technical knowledge. They really need to have a good grip on the subjects. It is showing that their technical knowledge is weak, and which is why they couldn't have been able to secure at least 45 marks. So technical knowledge, if it is weak, that means there are conceptual issues, or maybe you have poured in the whole of the technical knowledge, but then you did not practice sufficiently, and that's how, despite knowing the things, you were not able to handle things within the given time period in an appropriate manner on the exam day. But all those students who failed, but they secured at least 45 to 49 marks, that shows that at least there is like not a big problem as far as their technical concepts are concerned, but maybe they did not attempt the exam properly. Maybe when they were tested for a descriptive question, when it comes to section C, they did not pay attention to the number of marks attached with the questions. For instance, if a descriptive question comes and it is of worth 5 marks, and you are going to produce only 2 valid points, that means that you are not adhering to the marks which examiner has associated with a particular requirement. And if you are going to um, take your exam in such a way that you have done a little bit of the practice, but you did not take up the mock exam, because taking up the mock exam would mean that you have actually taken care of the time pressure as well. So if there happens to be a lack of handling time-based mock exam practice, that is for sure going to be one of the reasons that why a person had not been able to get through their exam. And the most important thing is careless handling of section A and B. And this is like something on which I emphasize a lot, as your exam is going to have three sections, section A, B, and C. Section A will be of worth 30 marks. Section B will be of worth 30 marks, while section C will be of worth 40 marks. So altogether, section A and section B are of worth 60 marks, which is like quite dominating. As far as you just have to see section C. Section A and Section B, it is all about OTs and OT cases. It's all about the answer which matters, where you will not have to show your workings to the examiner. So your practice in these two areas should be like really superb. You must have gone through, I usually say you should go through all the questions which are there in the Kaplan revision kit. But even if you are running short of time, still you try doing as many questions as possible when it comes to section A and section B. And if you're going to do all the questions, then this is going to be the perfect thing. Even if you have some extra time, then you may attempt Study Hub section A and section B, because these are those questions which are on their own can guarantee you that you'll be passing this exam. And as far as section C is concerned, technically, you cannot leave this section. You will have to practice this section. But you may do a selective practice. You may do like 20 to 25 questions out of section C, which are given in your Kaplan revision kit, and doing them on the practice platform. That is like important as well. It is not going to give you any benefit that you just open the kit, just go through the question, and then you're going to look at the solution which are given at the back of the kit. It is not at all a good way of preparing anything. You really need to be hands-on when it comes to the practice of section C. So I'm as I'm saying this, that you may figure out some of the important questions, and I'll be sharing the list for important section C questions with you people as well. So taking out some important questions, doing them on the practice platform, this is going to be a confidence booster. This will be something which will assure you that yes, you can present the things, and that's so in a right way. Okay, this is something for which you people are already aware of. As I said, your exam is going to be a computer-based exam. It's of 3 hours long, which means that you will have altogether 180 minutes. And that would mean in order to secure 100 marks, you will be having 1.8 minute for securing 1 mark. And you really need to be conscious as far as this time management thing is concerned. So when it comes to section A is all about OTs. You will have 15 OTs. And again, the answer has to be totally correct for every OT in order to secure 2 marks, as there are 2 marks associated with each OT. So 15 OTs would mean that this section will be carrying 30 marks. Here, you will not have to show your workings. Whatever the workings you are going to do, either on any extra loose sheet, which is given by the invigilator to you people on the exam day, or maybe you will be just opening up the scratch pad, doing a little bit of the calculation just to arrive at the answer. But that calculation needs not to be shown to your examiner. You will not be judged on the basis of whether you have done any calculation or not, and whether that working was correctly done or not. It is only the answer which matters. If the answer is correct, no matter how you have arrived at, you will be able to secure good marks. So is the case with section B. Section B will be carrying 3 OT cases, and every OT case will have 5 OTs each. So altogether, 30 marks are associated with section B. Again, whether you do any working or not. And of course, sometimes you will have to do some of the working in order to arrive at the answer, but that working is not gonna be checked by your examiner. It is only the answer which matters. But opposite to both section A and B, there happens to be section C, which will be carrying 3 constructed response question. The first question will be of worth 10 marks. The second question will be of 15 marks, and similarly, third question will be of 15 marks as well. So we may say that section C is also carrying 40 marks. And that's how the total script, the total exam is of worth 100 marks, out of which 50 marks are required to pass your exam. Well, when it comes to second question, we know that it is going to be covering income tax rules. When it is about the third question, it is about corporation tax rules. So we know definitely that question number 2 will be from income tax, question number 3 will be from corporation tax. But when it comes to question number 1, which is of worth 10 marks, we do not know that from which area this question is going to be tested. But wait. Normally, it is a repetition of income tax and corporation tax. And somehow we have observed that examiner tends to split that 10 marks question into further sub requirements. I mean, there is requirement A of worth 4 marks, then requirement B of worth 3 marks, maybe requirement C of worth 2 marks, and requirement D for 1 mark. So this is how he's like going to split 10 marks into multiple requirements. And in these requirements, what we have specifically seen that there is an element of planning as well. Some sort of planning element is also found as far as question number 1 of worth 10 marks is concerned. Okay, what kind of planning it is? It's like maybe you are given with 2 scenarios that a person is going to join a business either as an employee or as a partner. In both cases, just calculate his income tax liability and then tell us that which option is going to be feasible in terms of lower taxes that he has to pay, or he and the business altogether will have to pay. So this is how some sort of planning element is involved in those questions when it comes to question number 1 of section C. There's like another um, example of this planning thing as well. Maybe you are given with a situation where an individual is going to sell off their asset. He may do it either in the current tax year, or he may dispose of the asset in the next tax year. Maybe in the current year, he has already sold a lot of assets. So his annual exemption is already used. He's a high rate taxpayer. And maybe in the next year, his income is like going to be probably falling in the basic rate band. So he's a basic rate taxpayer and he's not going to be making off other disposals. So he will be able to make use of annual exempt amount in the next year. And you will have to compare that whether he disposes of the asset in the current year, what is going to be his CGT liability right now. But if he delays his disposal, then what is going to be his capital gains tax liability when it happens in the future tax year, and then comparing the results, the two results, in order to see that which option is like going to be like more preferable, which is like going to be optimal for that individual, for that situation. So this is how some sort of planning element is going to be discussed in section C, right? Okay, before that, I take you to the exam attempt that I said before that I shall be discussing, which is this one, June 26 exam attempt with you people. If you people have any questions in your mind which you want to ask me, then please drop your concerns in the dialog box, and afterwards I'll start doing this exam. Okay, so I'm just going to open this June 2026 exam attempt. In fact, I shall be discussing two exam attempts simultaneously with you people. Let me just show you what the reason behind this thing is. As this June exam attempt is something in which, of course, we are provided the latest most questions by the examiner, and which is why I'm like very keen to discuss these questions with you people. Still, examiner has released only section C as far as this uh, exam attempt is concerned. So I'll be discussing all section C questions with you people when it comes to June 2026 attempt, because this is all we are provided with. And then I will be discussing the practice set with you people. I mean, only their section A and section B questions. Of course, we are dealing with the latest most section C questions. And then for the practice set, I'll be taking you through their section A and section B, because unfortunately, our examiner has not provided us with section A and B for this latest attempt. All right. So this is section C only that I will be discussing with you people, and the time which is like left in this in today's session, that is like simply something which I could use for either section A or B, or even for section C. So in today's session we'll be handling section C first, and tomorrow I'll be like opening up this practice set, section A and section B, and then we'll be like discussing those questions, right? I hope you have understood the matter. All right, so this is like question number technically one of section C. So this is the section C that I am going to do right now of latest exam attempt uploaded by the examiner, relevant to June 2026 session. Kindly start reading the question. The question is there on the left hand side. I hope majority of you already know this thing. Let me just highlight this portion. Kindly start reading the question, and then I'll scroll up the screen to show you the remaining portion of the question, and then we'll head towards the solution. There is a question I found out in that particular past paper regarding the loan benefit adjustment 2 and 3 of the corporation tax question. Well, we'll address to that thing when that point comes. I'm going to, I think majority of you must have gone through the question. Can I scroll up the screen, scroll back the screen precisely to show the starting portion of this question once again? That is it. Okay, so I just hope that you people are done with it. And very surprising to what is normally seen, which is why I did discuss that usually what happens is, but this is like a little bit different from the usual circumstances, as this question number one has only one requirement of worth 10 marks. So altogether, you'll have to handle 10 marks for just one requirement. But this is like definitely carrying an element of planning in it, because they say that we need to calculate, and for calculation, we are given with the spreadsheet the overall amount of tax which Kahuna and JC will save for the tax year 25-26 if they undertake the three tax planning measures which you have identified. So, in support of your answer, you expected to prepare full income tax and CGT computations for both Kahuna and JC. Okay. So, well, I'm just going to once again show you the exhibit and in this, first of all, I'll be carrying out the full income tax and CGT computation for one person. You may take a start with Kahuna, or maybe you will be starting with JC, but I'll be like doing it first for Kahuna, and then I'll be doing the whole tax computation with JC, and then uh, we will see that who is bearing more taxes. Okay, so as it is said that when it comes to Kahuna, he is having an income tax liability of 42508, and this is based on taxable income of £127,000, which consisting of his director remuneration and the dividend of 11,000 respectively, and unused capital losses are of £13,100 from the previous tax year. And then, as they are indicating three tax planning measures, which are given in the end because the next information is related to Jesse, which I'll pick up the moment I'll be doing his calculation. It says that after meeting with Kahuna and JC, you have identified three tax planning measures with which the couple could undertake for the tax year 25-26. Kahuna's quoted share will be put into joint names so that JC receives 50% of the dividend income of £11,000. So when it comes to the dividend income of £11,000, only 50%, which is obviously equal to 5,500 precisely, that will be belonging to Kahuna, and the remaining 5,500 will be assessed on JC. Kahuna will contribute £20,000 net into a personal pension scheme. So by contributing into personal pension scheme, first of all, as it is a net figure, we'll have to gross it up, and it will be having two uh, implications. First of all, at the point of calculating ANI, the gross amount of personal pension contribution will be deducted, and that's how we come to know what personal allowance figure is. And then the gross amount of personal pension contribution will be added into the basic rate band, and that's how obviously somehow the tax liability will be saved. And JC's quoted shares will be put into their joint names prior to their disposal. So this is like something which we really need to take into account, because putting anything in joint names would mean that half of the gain will be accessible on Kahuna and half of the gain will be accessible on JC. And this is like a relevant point when it comes to capital gains tax computation. Okay, starting with income tax computation for Kahuna first. This is what we are going to do right now. This is about their income tax computation for the tax year 25-26. So it's always about you're going to put the appropriate heading. And if you are going to turn them into the bold statement, that is going to make it a little bit peculiar. This is how uh, your presentation becomes a little bit more effective. Okay, so as when we are calculating income taxes, we need to make three columns: non-saving, saving, and dividend. But I think non-saving and dividend column, these two columns are sufficient for Kahuna, because we haven't seen any savings income being received by him. Then it is said that his taxable income is 127,000, and out of which the director remuneration is of 116,000. So I'm just going to first focus on remuneration, the salary that he's receiving in the capacity of being a director. Salary being a part of employment income should be put under non-savings column. And then as far as dividend income is concerned, as it is said that it is going to be now put into the joint names. So half of the dividend will be assessed on Kahuna and half dividend income will be assessed on JC. So I'm just going to pick up only 50%, half of this £11,000. And I've already told you that makes up 5,500, an easy sum, easy calculation. All right. And the other thing which is going to impact Kahuna is their personal pension contribution. Okay, well, I'm just going to see what his total income is. This is going to be of 116,000 when it comes to non-savings column, then 5,500 for dividend column. Against the total income, we need to deduct qualifying interest payment, which is not given in the question. So this is like net income. I can call it as net income. And then against net income, we need to deduct the personal allowance. Personal allowance as it is of 12570, but that's available when adjusted net income is found to be either equal to or less than 100,000 pound, and that's clearly not the case over here. But do not judge the situation so quickly, as personal allowance is gonna be affected. I'm going to do a working one. I'm coming vertically in a downward direction, and here I'm going to put the same label. As I'm just going to navigate to that working, I will have to put the same working reference number. And first of all, I need to know what the adjusted net income of Kahuna is. As you can see, these are the two cells C10, D10. So ANI is equal to the total of the net income, C10 and D10, that makes up the total of the net income, minus if there is like any gross gifted donation. If that's there in the question, it should be deducted, but that's not there in the question. And then we need to deduct the gross amount of personal pension contribution. 20,000 is the net figure. I'm just going to gross it up. 20,000, if that's equal to 80%, then 100% figure is something which we need to take into account. Okay, so the total of the net income minus gross personal pension contribution, and see, that's a miracle that the ANI is like dropped down to 96,500 pound. And that would mean what? Is the personal allowance now available or not? Can we take benefit of personal allowance right now?
Yes, we will get the full personal allowance.
All right. So here we are definitely going to deduct the personal allowance, and that's too completely. It is not even gonna be a little bit compromised. Okay, so 12570, preferably we make deductions against non-savings figure. And then the taxable income will turn out to be 103,430 for non-savings column and 5,500 for savings column. Sometimes your keyboard keys do not work when you are handling your the practice platform, but these are always the options given in the start. You may just click on it in order to turn them into bold or highlight anything. Okay, so this is like said to be the taxable income, or you may call it as taxable amount. And then I am going to calculate the tax liability. But again, I need to know what the basic rate band is, because uh, the basic rate band has a capacity of 37,700. But here the gross amount of personal pension contribution will also be added, and that's how the capacity of basic rate band will be increased. 20,000 pound is the net figure. You may simply take into account that what the gross amount of personal pension contribution is. I think it's 25,000. By the way, if you haven't done the grossing up before, then of course at every point whenever you will be dealing with personal pension contribution, you need to gross it up first. So together the basic rate band is extended till 62,700 pounds, and afterwards the high rate band start. All right, so seeing this, I may simply say that their overall income is about 108 or 109 something, which means that the basic rate band will be used and the rest of the income will be assessed in the high rate band. There is a question that why 100 by 80? See, the gifted donation and personal pension contribution, though these are conceptually very different, but they are taken into the calculation in exactly the same way. We have to gross up the figure. So 20,000 is the net figure, and it is to be grossed up by multiplying it with the fraction of 100 by 80, because when it comes to personal pension contribution, an individual is believed to be paying only 80% of the total amount, and rest of the 20% will be compensated by government, which is why we need to divide it over 80 and multiplying it with 100 in order to see what the overall figure or by overall, I mean to say the contribution by the individual as well as the government, what the overall contribution into the personal pension scheme is. And this is the gross figure which tends to be added into the basic rate band. And see, the gross figures are something which we have to deduct against ANI calculation. Now, could you see that our basic rate band is extended to 6 to 700? It is falling in the cell C31. So I'm just going up once again. So C31 says that 62,700 is the figure available in the basic rate band. On this value, we shall be applying the basic rate, which is 20%. And then the remaining amount shall fall in the high rate band. So 103,430 minus 62,500, the remaining amount will fall in the high rate band, where the high rate for non-saving is 40%. And then there is no saving, so we have to jump to dividend income. First, £500 is always going to be assessed over nil rate, and the remaining amount. See, the overall figure is 5,500 minus 500. The remaining amount will fall in the high rate band, and the high rate is 33.75%. That's going to be of 0.3375. Okay, so what's going to be the overall figure? That is of 30,599.5. What is going to be the tax liability in this case if the tax planning measures taken into account? That's going to be of £30,600. Is there let me just recheck the computation. The basic rate band has £62,700. So 62,700, when it is removed from 103,430, the remaining amount will be taxed at the rate of 40%. So that's of 16,292. Okay, so the overall figure has to be 30,520. Non-savings tax liability is basically this, which I have highlighted, while dividends tax liability is 1687.5, or you may simply take it as 1688. Is this thing clear to each and every one of you? Yes, I'm going to show you the calculation related to non-savings column. First of all, instead of C31, I'm going to type the value as 62,700 is the value which is found in the basic rate band. By multiplying it with the basic rate, it results into a tax figure of 12540. And this 103430 as 62,700 has already been assessed. The remaining amount will be assessed over a high rate of 40%. So this is like going to result into a tax figure of 16292. And when it comes to dividend, first 500 is going to be assessed at nil rate. The remaining one will have to be assessed over a high rate, while the dividend is having a high rate of 33.75%. All right. Okay, so there was like another question as well that I didn't understand on personal allowance and ANI. See, ANI is basically having three things. ANI has the total of the net income. Then we deduct the gross amount of personal pension contribution and the gross amount of gifted donation. When these three things are taken into account, whatever the value comes out, that's called ANI. If ANI is either equal to or less than 100,000 pounds, then personal allowance will be deducted completely. If the ANI is going to be of greater than 100,000 pounds, but at least less than 125,140, then personal allowance is somehow reduced but still available. And if your ANI will become either equal to or more than 125,140, then personal allowance will be totally lost. Is that thing clear? Okay. Now, the next thing is something which I would like you people to do. As it is said that JC is going to have a chargeable gain of 49,000 pound, but right before the disposal, 50% of the shares will be put into the joint names. So that would mean that half of the gain will be assessed on Kahuna and half of the gain will be assessed on JC. I really want you people to carry out the CGT calculation for Kahuna only, as 49,000 pound is the overall gain in respect of the disposal of quoted shares. Half of the gain is relevant to Kahuna. Keeping that thing in mind, I would like you people to do the calculation and do not forget that Kahuna himself has unused brought forward capital losses of 13,100 pounds as well. So your time starts now and you'll be having 3.5 minutes for doing this thing. Have you So students, have you determined any value of CGT relevant to Kahuna? Okay, I'm just going to freeze my screen. I'll be taking 1 minute in order to do the calculations. Well, I have got one answer and that's correct. Okay, I'm just also giving you a hint. This student's answer is correct, 2016. That's the answer. Okay, you people should also try doing the computation. I am going to freeze my screen. I'm going to do the calculation just to show that what the answer is, though the answer is already communicated to you people. And I have given you a clue as well that there is half gain that you need to take into account. And Kahuna has brought forward capital losses as well. I'm going to unfreeze my screen just to show you that 49,000 pound is the overall gain. I have taken 50%, half of it. Then there is no current year loss. Then we have to deduct the annual exempt amount. Then the brought forward capital losses, which as per question are 13,100. And that's how the taxable gain figure is of 8,400 pounds. Well, the gain is like related to the disposal of quoted company shares. And normal CGT rates will apply. If the gain would fall in basic rate band, then rate is 18%. Otherwise, we apply the rate of 24%. Uh, Kahuna is already a high rate taxpayer, so basic rate implication is not possible. But why did I unfreeze my screen? Could you see that despite I gave an ample space for the workings, still I have come to the point where I do not have like ample space to show my answers. What I'm going to do, I'm going to select my workings, Control X. This is like how I'm going to cut it, and I'm just going to paste it a little later. Control V is the tool that we use for pasting, and unfortunately this is not being pasted. I don't know, something is like wrong with my practice platform or what. No, it's not working. Oh, so the tools are not really working right now. I'm just, otherwise, normally it works. There's like something wrong over here. Otherwise, it works. And you may simply like drag it at a little later point. So taxable gains are, instead of like giving a gap, just to make it like a little bit presentable, this way is like also perfect. Or in order to differentiate it further, I may give it some color so that examiner may precisely come to know where I have calculated my taxable gains. And then I'm going to calculate the CGT liability, as I've told you that this person is a high rate taxpayer and the high rate for dividend is 20, high rate for, sorry, CGT is 24%. So 24% of this value will be 2016 pounds. In fact, I should like, I may give it a little bit different color, right? So this is like going to be the CGT liability for Kahuna. We have calculated his income tax liability. We are done with his CGT liability, and that is it. Now we are going to carry out the same calculations, but for Jesse. Okay, so I am going to write down. And see, I am just going down vertically. It is not like that I am going to write down that now the time has come. This is JC on the horizontal side, on a parallel side. I'll be like carrying out their calculation. Absolutely no. This is not a very impressive sort of presentation. So I'm just vertically down. Once Kahuna is done, I am going to do the calculation related to JC. This is the income tax computation, which we are going to carry out. And this is for the tax year 25-26. Now, what Jesse has. Jesse will have an income tax liability of 1506 pounds, and this is based solely on employment income of 20,100. So this is her employment income, which belongs to non-savings column. And the other thing is about her CGT liability. Okay, but by taking up the planning measures, we need to see that what is going to be a change. Now, the thing is, I will have to carry out the income tax computation once again for Jessie, because it is not just her employment income only. Because if she would only be receiving employment income, her there will have been no impact on her existing tax liability. But I hope you remember that half of the shares ownership will be transferred to her, would mean that half dividend will be assessed on Kahuna and half is gonna be assessed on her. So what the overall dividend figure was, that was 11,000 pound. Half of this value is now belonging to her, and this is like a point of change, as her tax liability is no longer the same which she could expect had she been receiving only the employment income. Well, her employment income, her salary is of 20,100 pounds, and it belongs to non-savings column. Now I just need to see what the net income is. 20,100 is all about falling in the non-savings column. 5,500 belongs to dividend column. See, this is like the total income. There is no qualifying interest payment she has made, so her net income is same. And against the net income, we need to deduct the personal allowance. And well, she is not the one who has contributed into the personal pension scheme. So I will not be paying any consideration at that point. And precisely, her income is like quite limited. She is all in all safe. She can, without any doubt, deduct personal allowance completely. And that's how her taxable income in the non-savings column will turn out to be 7,530 pounds, and 5,500 pound is relevant to dividend. So it's like taxable income for non-saving and dividend. Okay, and her basic rate band will remain unaffected as well because she has not contributed anything into the person pension scheme. It is her husband Kahuna who did, and which is why his basic rate band got extended. But it's like almost 13,000 pounds something of her taxable income, which means that she is a basic rate taxpayer on the basis of her overall taxable income. She's a basic rate taxpayer. So I'm just going to take a start first with non-savings column. So this 7530 will be assessed over a basic rate of 20%. And then when it comes to dividend, 5,500 is the overall taxable income, out of which 500 is assessed on nil rate, while the remaining will be assessed on the basic rate. And I hope you remember that the basic rate for dividend is 8.75%. So her income tax liability altogether will be of 1,506 and 437.5. That's going to be of 1,943.5. So this is like going to be her income tax liability. Of course, her income tax liability is different as what she could expect had she been receiving only employment income. But of course, with dividend, the situation is like a little bit changed. And then I am going to calculate her capital gains tax liability. Well, the gain that she has realized on the disposal of the shares, as they are saying that this is the planning she could take, that half of the ownership will be transferred to Kahuna. So only half gain will be assessed on her. So what are going to be the current year gains? The current year gains are 49,000 pound altogether, and only 50% will be assessed on her. Same situation as what her husband had to bear. Her husband had to actually take into account. That's 24,500. Then we deduct current year capital losses. Well, there are no current year capital losses. Then we have to deduct the annual exempt amount. This is her annual exempt amount, JC's annual exempt amount, which is of 3,000 pound. And then she has to deduct her brought forward capital losses, which is like she's not having any brought forward capital losses. So her taxable gains are 21,500 pounds. And now I am going to freeze my screen again. And you people will have to tell me that what is going to be her tax liability and why am I going to freeze my screen, because I'll be doing the calculation as well just to save time. See, keep this thing in mind. It is said clearly that she is not eligible for BADR, so do not apply the rate which is otherwise applicable if shares disposal qualify under business asset disposal relief rules. But her taxable income is 7,530 and 5,500 together. It's make 13,030 pounds, which makes me believe that her basic rate band is available. She'll be using the available basic rate band first, and then whatever the gain will be falling in the high rate band, she will go for that. I have received the answer as well. Yes, your answer is absolutely correct, but I'm giving you all the time in order to come at the calculation. Okay, so I did get a question before as well. Sorry, I skipped it altogether. How did you compute the current year gain? See, the current year gain figure is already computed. I'm just going to take half of it because this is what Kahuna and Jesse are having, and there are three planning measures which we are going to apply, and we are doing the computation, the both the income tax and the CGT computation for Kahuna as well as Jesse once again, and then we compare that if these three planning measures are taken up, then whether it would have any impact on saving their tax liabilities or not? I mean, what the existing tax liability they are having right now, will they be changed or not? Okay, so another answer, same answer, which I believe you people are getting it right. And there are some other students in the group as well. Please, you may also try doing the computation. And it's a very simple one. Let me just tell you that the basic rate band is quite sufficient enough over here to consume the gains. There's a question, are we allowed to use short forms in exams? Well, there are certain things which can definitely be used in their shortened form, as in AEA, annual exempt amount, PA, the personal allowance, ANI, the adjusted net income. But unnecessary shortening the words, this is not something which examiner likes. See, majority of you are enrolled in the group and you have somehow seen that which things could be spoken or written in a short form, as in SBA, the structures and building allowance. I hardly say structures and building allowance. I normally try saying SPA, and I always write SPA. And if you really need to know that, how would you come to know that which things could be like mentioned in their short forms? Your practice kit is going to be a helpful tool in this regard. Just look at the solution and see that which things your examiner like to write in a short way, as in NSI, SI. So anything which we have used in our recordings, or you may find at the end of your kit in the solutions, this is going to give you an idea that which things you may precisely, definitely use in their short forms. Okay, well, going back to the question, though the basic rate band of JC will not be changed, as she had neither contributed anything into the gifted donation or the personal pension contribution. 37,700 is the overall amount, out of which the taxable income of taxable income relevant to income tax has already been used. So that would mean that 7530 and 5500, they've already been used out of the basic rate band. And how much of the basic rate band is still left? That is of 24670. Well, I'm going to remove it, 24670 something, and our taxable gains are quite less as compared to the available figure in the basic rate band, which means the whole of the gains will be fitted very well in the basic rate band. And that's how we shall only be applying the basic rate of 18% on the taxable value of the gains, right? Okay, so till now, what we are done with, we have calculated Kahuna's income tax liability, which is of 30,520 pounds, 2016, which is the CGT liability, Then JC's income tax liabilities of 1943.5 and CGT is of 3870. And without taking these planning measures, they have clearly mentioned you that what their respective income tax and CGT liabilities are. So I'm just going to see that what is going to be an overall impact on their tax figures if they take up the planning measures. So see, focus on the verb. We have to calculate the overall amount of tax which Kahuna and Jesse will save. So it is not just that you will leave the answer as it is once you have determined the income tax figures and CGT figures by taking into account the revised planning measures. You will have to conclude the difference. I mean, we need to see that what they used to pay before and what they are now paying, and that's how what an overall saving they will achieve this way. So I'm just going to write down tax saving if planning measures are undertaken. So if these planning measures are gonna be undertaken, then how much income tax will be saved altogether? See, I'm going to take a start with the sign of is equal to, and we'll be just clicking on the relevant cell to copy the information. Kahuna's income tax liability is 30520, right? 30520, and I need to see whether it is like still working or not. Oh my God, because usually when we take a start with the sign of is equal to, and you're going to click on any other cell, the information is like definitely copied, but that's okay. 30520 is now the tax liability, but before that, how much of the tax liability they used to pay? It is like 42508. So 42508 is the tax figure which used to be paid before by Kahuna had there been no implementation of tax planning measures, and how much of the tax Jesse had to bear as far as income tax implications are concerned, that is of 1506. But see, these are two tax figures for both of these people, and this is like right before applying the tax planning measures. And I need to see that right now, after the tax planning measures are executed, Kahuna will be bearing the tax figure of 30520, and Jesse will have to pay the tax figure of 1943.5, or you may take it as 1944. So I'm just going to deduct it minus 30520, and the income tax which now Jesse has to pay is 1944. So that would mean that if we compare what could happen without applying these tax planning measures and what is the tax liability right now, how much of the saving of tax is being achieved? This is of 11550. And let's see that how much of the CGT liability they are now saving. See, without implementing any tax planning measures, Kahuna did not sell off any asset, so his CGT liability was zero, while Jesse was paying an overall CGT figure of 9230 pounds. But because we have the tax planning measure is that 50% of the ownership should be transferred to Kahuna, would mean that now Kahuna will be bearing the CGT liability of 2016 pounds, and Jesse will be bearing the CGT liability of 3870 pounds. So I'm just going to deduct these two figures in order to see that how much of the overall tax saving will be achieved this way. So even that, by splitting the ownership would lead to a CGT saving of 3344. So what an overall tax saving will be achieved? Both income tax and CGT liabilities will be reduced by how much figure? By 14894. So this is like said to be the overall tax saving which the couple would achieve if only these three tax planning measures are taken into account. Are you all getting this point? All right. So let me just show you the solution quickly. See, this is how we have made a vertical presentation, the main working and then their supporting workings. This is how the things are to be presented. It's never like that you'll be showing the other workings first and then the main working. The main format's always shown first and then their related workings are to be presented. One more thing. Sometimes students ask that what do we have to do with the sign of pound? See, we do have an option of this. I mean, with whatever value you would like to put a sign of pound, you may do so. But sometimes again, either this app doesn't work, or this feature of the app doesn't work, or um, maybe it is like going to be a little bit difficult to keep on like opening this again and again and like putting the sign of pound. So let me just tell you that you need not to worry. You need not to worry about this thing at all. One thing which you may do if you want to, because not mentioning the sign of pound wouldn't mean that you are going to lose something. But if you would like to make it more professional, what would you do? It is like in the question section, you will definitely find many pound signs. So Control C, you're going to copy it and you are going to mention in the start of the column where you are going to carry out your calculation. So this is like one way you can do if you want to present the sign of pound, that in the start you will be just putting the sign of pound and that is it. Not with every value. It is going to be a hell wasting activity and you cannot take this risk of wasting your time. Neither I nor your examiner are in a favor of like thinking about this pound sign. This is understood. You are taking up the paper of UK variant. Of course, the currency sign is pound. But even if you would like to present something, if you would like to make it a little bit presentable, then only a pound sign in the start would be sufficient. Or maybe the pound sign with the answer, that is sufficient. Or this an easiest most way is that when you have found the answer, the final answer, you would write in capitals GBP, right? GBP, Great Britain pound. So that is it. And that's something, I mean, I basically prefer that if with the answer you're just going to write GBP, that is more than enough. Is that thing okay with all of you? The question is, can we show the working beside the performer? No, this is, though in certain cases we have seen that examiner doesn't mind this, doesn't have apprehensions over this, but the presentable way is to show the main format first and then the respective calculations. So workings are to be done once the main format is presented. So whenever you are going to do anything, you may create a reasonable gap in between the main format and the calculations. And these shortkeys Control C and Control V, they will definitely work in your exam. Sometimes the issue happens with the practice platform. Okay, so now we have another question, question number 2 of section C. As I told you that this must be from income tax rules. Kindly start reading the question and then I'll discuss the requirement and their respective solutions with you people. I did just copy the sign of pound from the question side. See, I selected it and then Control C, and I'm just going to put it over here, Control V. So this is how you're going to put this sign. The question is, I've mistakenly told you that I doubt of loan benefit corporation type. It's in the question. Okay. The income tax imputation is something which now we are going to deal with. So this will definitely be addressed. Start reading the question, students.
Yakati, come on.
All right. I hope you must have gone through the entire question. This question is having the first requirement of worth 12 marks. This is like going to be a kind of comprehensive thing. Here we need to calculate the amount of income tax payable by Luke for the tax year 25-26. And do not forget reading the notes, because these are something which are going to indicate you which must be carrying marks. You should indicate by the use of zero any items which are not taxable or deductible. Okay, so here you'll have to carry out the calculation with respect to the income received by Luke. It is like once again related to income tax computation. Of course, it will require a format, a little bit of the formalities. So income tax computation, you will have to write the name and then mentioning the tax year for which the calculation is being carried out. Of course, while calculating income tax figure, you need to make three columns: non-saving, saving, and dividend. And uh, Luke is basically receiving all income from all these sources. It is said that his gross annual salary is of £36,000, and we know that salary is something which belongs to non-savings income column, but this is an annual salary. And he had been employed till 5th of August 25, which means that Luke has only worked for 4 months in this tax year. So whatever his salary relevant to these 4 months are, this is something which I'm going to take into account. You may do one thing, you will be calculating salary, bonus, commission, benefits, I mean everything related to employment income separately. I mean, a separate working is carried out first. And once you determine the overall employment income, you're going to put that employment income under non-savings column. But I personally prefer that every element of employment income should be separately disclosed under non-saving income column. This is how it actually puts your examiner, puts your paper checker at ease. He may then find it easy to give you score, relevant score. So it's like 36,000 is the salary into 4 by 12. So the gross annual salary is of £36,000. 4 months salary is relevant to this tax year. That's 12,000. Then it is also said that his remuneration package includes few more things, as well as the company has made a contribution which is equal to 4% of Luke's gross salary to his personal pension scheme. So whensoever employer is going to contribute anything on the behalf of their employee, either in the personal pension scheme or in the occupational pension scheme, that is exempt, that is not taxable. And if something is exempt, which is not going, you are not going to take into account, you will have to present the fact with zero. Even if this line wasn't given, I must have presented every such thing with zero, which despite being mentioned over here, either not deductible or taxable. But considering they have explicitly said this thing, then of course I cannot ignore it at all. Then it is also said that Chapukino Public Limited Company, which is their employer, they've made an interest-free loan. Okay, so there comes your point. Interest-free loan of £24,000 to Luke on 1st January 2024, and this was used to make improvements to his home. Luke had never made any capital repayments until 5th August when he repaid the loan in full. See, he had kept a loan of £24,000 on 1st January 24, and see, this 1st January 24 is like the date which is falling in the tax year 2324, and we will have to do the calculation only for this tax year, which is the tax year 25-26, and this amount got repaid on 5th of August 25. So starting from this tax year is going to be starting from 6th April 25 till 5th of August 25. That means April, May, June, July, and 5 days of August. The calculation based on days is typically ignored, so I'll be taking into account the amount relevant to 4 months only. All right, so we need to see that the amount of loan, which is £24,000, had this loan been taken up from any financial institution, then official interest rate of 3.75% will have to be paid. But here in this tax year, he's not paying anything as it's an interest-free loan. So this is exactly the amount equivalent to 3.75%, which is being saved. Okay, so what am I going to do? I need to see the interest saved for the first loan. The first loan figure is of £24,000. Right at the start of the tax year, the value of loan was 24,000, and then it got fully repaid. It came to an end. Okay, so there are few questions that I did receive. Okay, I'm just going to address the first one. Why is it 4 months? See, it is said that Luke is a part-time employee till 5th of August. So 5th of August is the date at which he's either going to be redundant or he's going to resign from his employment. So I just need to take into account the values starting from the tax year till 5th of August, which makes up 4 months approximately, right? Okay. And the second question is that I have a particular doubt, which method to use, precise or average? I am not going to use any method, neither average nor this strict method, because these methods are used whenever there happens to be a fluctuation in the value of loan. Either it is a little bit increased or a little bit reduced. See, this loan was 24,000. It remained 24,000 from the start of the tax year, and it was repaid. It came to an end. There was like not a little bit increase or decrease in the value, because for these kind of situations we apply the rules, like the ones called average rule or the strict rule. Okay. The interest saved not can come under savings income. No, this is like relevant to this is like relevant to employment, and everything related to employment will be listed under non-savings column. Okay, so 24,000 is the amount of loan. Had Luke taken up this loan from some financial institute, they have paid interest at the rate of 3.75%, but right now it's interest free. So whole of 3.75% is being saved, but this percentage is always meant for a year, And starting from this tax year till 5th of August, the loan is over, which would mean that he has saved only an interest figure relevant to 4 months. So 4 months interest saved figure is of £300, right? And then there is like another matter related to interest saved once again, where it is said that Chapekino Public Limited Company made an interest-free loan of £6,000 to Luke on 6th April 25. Again, this is the loan which is like started right from the start of the tax year, which he used to buy a season ticket for his commute to work. So once again, for non-qualifying reasons, he has got a loan. But could you see that the loan figure is of £6,000? The outstanding balance of this loan between 6th April to 5th April was £6,000, and he paid the loan in full on 5th August 25. Now, this is like a kind of a little bit confusing point, because if you just see, this is one loan from the same employer to the same employee, but it is like something which is existing since 1st January 2024. This is another loan which is just made to Luke from the start of this tax year. If, for instance, the one I'm going to highlight, for instance, in the absence of this loan, if altogether this loan was not existing in the picture and Luke was only given with a loan of £6,000 for non-qualifying reasons, considering this loan is not more than £10,000, that would mean that he did not have to calculate any interest saved, right? Because this case, it is treated as an exempt benefit. But considering he is like given with two loans, 24,000 and 6,000, an overall amount of loan you got from your employer for non-qualifying reasons, if the overall figure is of more than £10,000, then every value will be considered for the sake of calculating for the sake of like calculating interest being saved. I mean, they both are now going to be assessed, right? So the thing is, now what am I going to do? Again, I need to see that how much of the interest is being saved as far as this loan is concerned. So again, £6,000 is the amount of loan. We are going to save interest at the rate of 3.75% completely. And this was the loan given on 6th April 25 until 5th of August. The loan was repaid, of course, because Luke had resigned from the organization. So 4 months interest figure will be equivalent to £75. So altogether, £375 have been saved. I did not apply neither the precise method nor the average method, because the loan figures itself did not face any little bit increase or decrease. They did not fluctuate. They were there in the picture and they were repaid by the time Luke had to leave the organization. Is that thing clear? There's a question, what is the difference between both loans? Technically, there is no difference. These both loans are given for non-qualifying purposes. It's just that there is a difference in the timing on which loan was given. One loan is an old loan, I mean, back in the tax year 23, 24, then in the tax year 24, 25, and now in this year, Luke has calculated interest saved on qualifying loan. They must have paid, he must have paid taxes on it. But the other loan is something which is just given to him in this tax year. So it is only a little bit of the interest saved, which is going to be taxable right now in the current tax year. Clear? All right. Then there happens to be the fourth point, which says that on 1st May 25, Chapekino Public Limited Company made a gift of food hamper to Luke on his birthday. The food hampers cost Chapakino Public Limited Company, £45. Now, people just tell me, what do you have to say as far as this point is concerned? These are certain points which are like, though very obvious, but tend to create confusion among students. There's a question, but why did we deduct zero? Oh, by deducting zero from any value, that means you did not do anything. Number one. Number two, it's like usually we compare that what is an official rate of interest, which is 3.75%, and how much interest the individual, the employee had paid. Employee might have paid 1% or 2% or 3%, and then we take the difference, right? So we need to take the difference, as in this is the amount of interest that has been saved. Considering it's an interest-free loan would mean that 3.75% would have been charged had this loan been taken up from some financial institutions, and Luke is not paying anything else. I mean, no interest is being charged. It's an interest-free loan. So the whole amount of 3.75% is assessed as a taxable benefit. The question is, food gifts are exempt. They are not allowable in self-employment. This is the employment income. Okay. So one thing that you must have gone through with respect to these words, specifically the food gift, food hampers. This is something which we learned in case of income tax computation, trading profit rules. So whenever a self-employed person, the employer, is giving away any gift to their employees, if that is a food, drink, tobacco, or voucher exchangeable for goods, it is a disallowed expense, right? So for employer, they cannot make a deduction against their trading profits. But using those words which you have heard somewhere else, now the party is different. They're not talking about the employer, they're talking about Luke, who received these gifts. And we need to see that what is like going to be the implication. So technically we must consider it this way, that Luke has received gift. It was a gift of food hamper. It had cost £45. So do you remember that if an employee is receiving something, and that's so in the name of a gift, if they are receiving a gift and the cost is not more than £50 per head, this is like such a trivial, minute thing. So trivial benefits, as every person who is like receiving anything, if it is like costing not more than £50 per head to their employer, that means they're receiving the trivial gifts, and trivial gifts are something which are to be taken as exempt benefits. So here I shall, on the behalf of Luke, I will say that this is an exempt benefit. So it is about food hampers, which is like falling in the trivial gifts category. So it is like zero. I mean, not to be assessed. It's an exempt benefit. Then we need to deal with this fifth point, and I'm just going to give you people 2 minutes in order to deal with this point. It says that Luke used his own car to visit Chapakino Public Limited's clients during the period 6th April to 5th August, and he drove 8,500 miles on business journeys, for which he received a mileage allowance of £3,060 from Chapakino Public Limited Company. Pay of 1,610 was deducted from his salary. So this is like something which I will use at the end when the tax liability would have been calculated, and I will have been left with calculating the tax payable figure. So this is like the highlighted thing which you need to take into account. Whenever an employee is going to drive their personal car for business journeys, it is an approved mileage allowance for passenger. He has driven 8,500 miles only, but he is also receiving a cash of £3,060. And in such cases, we need to compare the two figures in order to see whether the employee is receiving less or he's receiving more. Because if he's receiving less, then the deficit is treated as an allowable deduction. And if an employee is receiving more than the allowed mileage allowance, then excess shall have to be treated as a taxable benefit. I just got, I think, an answer from someone. I think your answer is correct. Yes, it's correct. But let's other do the computation as well. I really want all of you to get involved in this. It will take hardly a minute or so. Yes, you all are right. It is 765 allowable deduction. So technically considering that we are going to calculate approved mileage allowance for passenger. See, I may do the calculation in one line. He is receiving 3060 and this amount. Now we need to see that if it is like more or less as compared to the approved mileage allowance for passenger, as 8500 are the miles that he has driven in his personal car for business journeys, and as long as the miles driven in the car are of 10 are up to 10,000 miles, then they may claim an allowance of 45 pence per mile, which is like equal to 40.45 pounds. So there is a shortfall of 765 pounds. I mean 765 pound less. That's something Luke has received. So this is like still to be treated as his allowable deduction. And allowable deduction is something which is going to be deducted against the employment income. And as I'm going to openly write down all the things related to employment income computation under non-savings income column, so I have mentioned the 765 negative under non-savings column. Now we have dealt with all the points related to Luke's employment. The only thing which we need to discuss is the pay figure, but this is something which we have to deal in the last. And then not just an employee, he is a self-employed person as well, starting from 6th August 25. So becoming a self-employed person would mean that he is gonna be assessed for the profits that he has, and profits are also belonging to non-savings column. So on 6th of August 25, Luke took out a personal bank loan to purchase a 20% share in a partnership. See, just focus that he want to be a partner in the partnership, but for that purpose, for the sake of doing an investment, he has taken up a loan. And don't you think that this is like the point which is like relevant to qualifying interest payment, that whosoever is going to take up a loan in order to make an investment into a partnership, a cooperative, a an employee controlled company or closed trading company, so whatever the interest they pay exactly, that is to be deducted against their total income, right? So this is like something which I will take into account. Okay, so how much he paid as interest? He paid 16,000 pound. I mean, they did not give us a hint that how much loan he took from the bank, what was the interest rate, but all they have told us, that's the only required thing, that he has paid an interest of 16,000 pounds. So whatever the interest individual pays because of like taking up a loan for qualifying reasons, that is to be deducted against total income, right? So this is like something I will definitely take into account in the end once I have segregated all the income. And then it is said that for the year ended 31st March 26, the partnership made a trading profit of 360,000 pounds. See, first of all, this is a partnership business. So it is not Luke only who is like having an access to the profit. There are other people as well in the partnership. And though partnership profit sharing ratio is a little bit comprehensive, it does require us to know that what salary or what interest on capital partners are receiving from the partnership, and then the remaining profit is then apportioned in between the partners. But the point is that no such information about either the salary or the interest on capital that a partner might have from the business is like mentioned in the question. So it is just the profit for which I need to be careful about. The profit is of 360,000 pound. But is this the profit for the whole year? Yes. This is partnership overall profit for the year ended 31st March 26. But when Luke joined, he joined on 6th of August 25. So when he joined till the end of the period, I need to see that for how many months he had been a partner in the partnership. So it's like August, September, October, November, December, January, February, and March. So it's like only 8 months in the whole year he had been a partner. And for the 8 months, he doesn't have a right on all profits. He has only 20% share in the partnership. So I will have to apportion. I hope you remember all the students who who have either taken my lectures or someone else's lectures, that if a partner joins in between an accounting period, the change profits and the post change profits are taken into account differently. So once he became a part of this business on 6th of August 25, only 8 months left. So technically he is linked with the second half, the 8 months of the accounting period. And for that period, he is assessable on only 20% of the profit. Not all the profit is going to be assessed on him, as is a 20% partner. So this is like a profit from the partnership. I'm going to do the calculation in the cell. Show the calculation. If the calculation is something which you can handle in the cell, then do it in the handle. Otherwise, if you think that it is like pretty much comprehensive for you by like incorporating everything in the cell, then make a separate step. Show the relevant workings separately, but clearly label them. You will put working one and then you'll be like doing the working one separately. Okay, so 360,000 pound is the profit for a year. The profit figure for 8 months is something which we are going to determine, out of which only 20% is relevant to Luke. So 20% profit figure is equivalent to 48,000 pound. And I am sorry, this has to be mentioned under non-savings column, and still it's not, this copy paste, cutting pasting activity is not working on my portal. I'm going to do it again. 360,000 pound is the overall profit for the whole year. 8 months profit figure. This is the first thing on which the profit figure is to be portioned, and then I'll be picking up 20% of it. So that's equal to 48,000 pound profit, something which has to be mentioned under non-savings income column, right? And then what we have next, this is about other information. During the tax year 25-26, Luke received dividend income of 29,000 and savings income of 14,000. So savings income, this is like interest income. So it has to be mentioned under savings column. This is of 14,000 pound, while dividend figure that they have received is of 29,000 pounds. Dividend has its own column. Now, it is like one more thing that he's like having. He received interest of 3,000 from ISA. Interest from ISA is exempt. That is not taxable. But whenever you're going to get anything which is exempt, it should be mentioned as 0. And of course, it's an interest, so I'm going to mention it under savings column. And then Luke has made a gifted donation during the tax year of 2,500. Focus on the word net. So it needs to be grossed up first. And gifted donation is something which will have to be taken into account at the point when we are determining ANI, the adjusted net income. And then we will consider it at the point when we are going to figure out the basic rate band. Okay, so this is like something which I will have to take into account yet. And this is the information related to requirement B of this question. So now what am I going to do? I want to know what the total income for Luke for the tax year 25-26 is equal to sum brackets open, as I'm going to take into account a lot of cells. Thankfully, now this is now working. Brackets closed. So it's like the total income is of 59,610 for non-savings column. For savings, it is just 14,000. For dividend, it is just of 29,000. Okay, so I have determined the total income. Against the total income, we need to deduct the qualifying interest payment. See, there had been a discussion of qualifying interest payment, as it is said that Luke took out the personal loan in order to make an investment into the partnership. So whatsoever the interest he has paid, it is gonna get deducted against his total income. Can anyone tell me that under from which accounts it's non-savings column or savings column? Simple and straight question. Qualifying interest payment and personal allowances are preferably deducted from non-savings column. Yes, you're right. So it's non-saving income column, obviously. So 16,000 pound is gonna be deducted against non-savings column. Then what will I arrive at? It is the net income. The net income for non-savings column will be of 43610. For savings, that's 14,000. For dividend, it's going to be of 29,000. So this is like net income against which I need to deduct the personal allowance figure. The personal allowance is of 12,570, again preferably deducted from non-savings column first, and I am going to deduct it completely. Why? Because if you take the overall net income, if you just do the calculation quickly on your calculators, this value is not more than 100,000 pound. Or if it is like more than 100,000 pound, then I need to be better conscious. Just tell me, what is the overall total of this figure? Isn't that something 86,000 something 610 pounds? Yes, 86610. If I take the overall total of net income, that's of less than 100,000 pounds. So I am quite relaxed that personal allowance is completely deductible. If I have rather found that the overall net income is of more than 100,000 pounds, then I had to go into the detail, as in it is not just the net income total which is going to be a decisive factor. I had to carry out ANI, the adjusted net income calculation first, which includes the total of the net income. Then we deduct gross personal pension contribution if there is any, and the gross gifted donation. And then if the final answer, which is called as ANI, if it is found to be of greater than 100,000 pound, then only then we would have reduced our personal allowance. But considering it is just the net income which is altogether lower than 100,000 pound, makes me believe that everything is under control, right? So taxable income in this case will turn out to be for non-savings, it's of 43610 less 12570. For savings, that's of 14,000 pounds. And then for dividend, that's going to be of 29,000 pounds. All right. So we do have taxable income in front of us. And after this, I have to start calculating tax liability, but do not forget that our basic rate band is going to be changed. Though the change is a mild change because he has contributed 2,500 net into a national charity. It's a gifted donation, but somehow I will have to figure it out. So I'm just going down. I'm going to leave a little bit space for the further calculation. And this is how I'm going to do the workings. This is working 1. The basic rate band is of 37,700 normally, but now the gross amount of gifted donation shall be added into it. Had they said that this 2,500 is already a gross figure, then I had to straight away add this gross amount, but it is like a net figure. So it is to be multiplied with 100 divided over 80 as this is how we are going to gross it up. And then the gross amount shall be added into the basic rate band figure. So revised basic rate is 40820. Clear? 40825. It's the extended value for the basic rate band. Okay, going up again. When it comes to non-savings column, 31040 is like quite smaller value. It is going to be easily adjusted in the basic rate band, which is now 40825. Okay, so this 31040 into 20%. So what will that be? It's going to be of 6208 pounds. Then we have to, there's a question, what about the contribution in personal pension scheme? See, this is the personal pension scheme which employer has paid. When employer pays into either into personal pension scheme or occupational pension scheme, that is an exempt income for the individual, and it is not gonna be contributing towards the extension of the basic rate band. When employee himself, the individual himself will be contributing into the personal pension scheme, then only then the gross amount shall be added into the basic rate band figure. Clear? Is my voice clear? £14,000. Be very careful. I think not all of the savings value will be adjusted completely in the basic rate band. So I just need to see that if 40825 is the basic rate band overall figure in this case, against which 31040 has already been utilized, which is like relevant to non-savings column, only 9785 is left. Okay, I'm just going to show this calculation. 9785 is left, on which I shall now be I'm going to pick it up for the sake of calculating. Savings rate out of 14,9785 will be adjusted in the leftover figure of the basic rate band. And what the basic rate for savings is that 9785 or 9285? Let me just, okay. There is like one more thing which we need to consider. I'm just going to, I wish it could be now copied. No, it is not. So stubborn. 40825 less 31040. Can you please reconfirm, is the value is still 9785 or there's like a different thing? What the value is left in the basic rate band? That is 9785. Okay. So this is like the value left in the basic rate band. And out of 14,000, I'll be adjusting 9785 in the basic rate band, and the leftover figure will then be falling in the high rate band. But see, if you just take a total of the taxable incomes of this person is turned out to be a high rate taxpayer, right? 31040, 14,000, 29,000. If you just total them up, this person is falling in the high rate band. Though the high rate ends at 125140, but because of this contribution into the gifted scheme, the gross amount is added into the ending figure of high rate band as well. So our basic rate band is like little more than 125140, but whatever it is, this value is like the overall sum of taxable income suggests that this person is in the high rate band, right? So being a high rate taxpayer, if you're receiving savings income, first 500 will be assessed at nil rate. There's going to be no tax implication, while remaining amount will be taxed in a normal way. So 9785 minus 500, remaining amount will be assessed in a normal way where it is going to be fitted into the basic rate band while the basic rate is of 20%. So it's like 9785 less 500 into 20%. So that's going to be of 1875 pounds. So I have handled 9785 out of 14,000, but on 500, on the first 500 of the savings income, there had been no rate implementation. It got covered in the nil rate band because this person is a high rate taxpayer, while the remaining amount was assessed in the basic rate band, and the basic rate for savings is 20%. And now I need to see that how much of the savings income is left. Savings taxable income is of £14,000, and out of this, I have altogether considered 9785. Though out of 9785, 500 got taxed at nil rate, remaining got taxed at 20%, but altogether 9785 has been considered, and the remaining amount shall now fall in the high rate band, and well, high rate for savings is 40%. So 14,000 less 9785 into 40%. So that will be of £1686. Are you all clear about this calculation, that why did I split the income related to basic rate band and then the remaining shall be falling in the high rate band, and where we had to take a start, our income's first 500 belonging to savings had to be taxed over a nil rate. Is that clear? Now with dividend, in case of dividends, whether person is a basic rate taxpayer or a high rate taxpayer or even an additional rate taxpayer, first £500 will always be taxed over nil rate. So 500 will always be taxed over nil rate, and the remaining amount, it's like 29,000 less 500. The remaining amount shall fall in the high rate band, and the high rate for dividend is 33.75%. So that's going to be of 29,000 minus 500 into 33.75%. So that will give rise to a tax figure of 9618.8, or you may take it as £9619. So I am now going to take a total again. Surprisingly, it has come to the point. I thought there must have been left few lines, and you know that my this cutting pasting activity is not working right now. Otherwise, I would have simply copied the workings. Though they're very nominal workings, I can rewrite it, but why to waste time? Okay, so I'm just going to add up, and the tax liability is £19,370. So this is like said to be our tax liability, but unfortunately, I will have to take the workings at a little later point. Why? Again, I'm just going to take this courage to copy and paste it, but no, it's of no use. So I'm just going to and well, don't worry, this is not going to be the case in the exam. This is working one. I have replicated these things. Why? Because I really wanted to have some more space. Because, you know, in this question, we had to calculate tax payable, and there is a difference in between tax liability and tax payable when it comes to income tax computation. Because against the liability, we need to see that how much of the tax has already been paid, it is going to be deducted, and then we need to see that how much of the tax is like still to be paid. This is called tax payable calculation. And how much of the tax has been paid during the year under pay as you earn system. They have clearly mentioned it is of £1610. So I'm just going to deduct £1610. And then I need to see that how much of the tax is still payable. So that's going to be of 17760. 17760 is the amount of tax payable. All right. Is this thing clear? This is the amount of tax payable by Luke for the tax year 25-26. Is this thing clear to each and every one of you? All right. See, here is the main format. And vertically going down, we are showing the workings, and I have to narrate the workings here as well. I mean, the reference at the point where we are using the working should be shown, because at savings point, I had to be careful enough that how much of the basic rate band is still left. So I have to label them, reference it as well. There's a question, can we have a break? Just we need to work for 12 more minutes and today's session will be over, and then we'll be like tackling the rest of the things in tomorrow's session, right? I'm just going to take you to the next requirement, which is of worth 3 marks. Kindly have a look at it. I'll be straight away showing you the standard solution for this, but what does this question exactly ask us? Okay, you want me to scroll it down? Okay, sorry. Let's have a look at it. So could you notice one thing, that as far as the tax year 24-25 is concerned, Carmen was present in the UK for just 64 days. If you just count that this 1st February 25 is falling in the tax year 24-25, and if this date is falling in the tax year 24-25, that would mean the tax year comes to an end on 5th April 25. So February has 28 days, and then March has 31 days, and then 5th of April. So altogether, it does have 64 days, right? And as Carmen wasn't previously resident in the UK, she will be considered UK resident for tax purposes if in case she is going to fulfill 4 UK ties. And how many ties does she have? According to the question, she has only 3 ties at that time. So she is not a UK resident person. But how did I conveniently say this thing? See, I prefer that you people should not remember these ties thing. You may take a help of this table by opening up the tax rates table, and it is like on the downward left bottom corner, basically, where you will click and you will find these tax tables and see if a person is not previously resident and they are going to stay for 64 days, which is like falling somewhere in between 46 to 90 days. That person will be considered resident of UK and hence paying UK tax liability for that tax year if he meets up 4 UK ties. Considering Cadman is like having only 3 UK ties, which is why she is a non-UK resident person for the tax year 24-25, right? So you have like correctly answered this. Now we have to talk about the next tax year as well, because we have to mention it for the next tax year 25-26. See, now if you consider the tax year 25-26, it is said that as she permanently moved on 1st February 2025, that would mean that she'll be staying for the whole of the tax year. And if someone is going to stay for either equal to or more than 183 days in any tax year, that person is automatically to be treated as a UK resident person. So she being present in the UK for more than 183 days would mean she is going to be treated as an automatic UK resident person. And having said that, the person is an automatic UK resident person would mean that she doesn't need to meet the ties thing. If I mean, first of all, we apply the criteria of automatic non-UK resident person. If that is not met, then we move to automatic UK resident person. And if it is not met, then we come to the criteria where we see that whether person was previously UK resident or not, and how many days he or she has lived in the UK for a particular tax year, and how many ties he or she has with UK. And then on this comprehensive basis, we decide someone else's status for the tax year. But if someone is like gonna be meeting either of the automatic tests, then there is no need to apply the ties test. I'm just going to show you the standard solution as well. So sorry, it is just a minute. There you go. So as this question is for 3 marks, you had to better state it in the form of 3 valid points. The first valid point is you put the heading 24-25. The first valid point is that Carmen will be present in the UK for 64 days, starting from February 25 to 5th April 25 during 24-25. And she was not previously resident in the UK. So she'll be resident for UK tax purposes if she's there for 64 days having 4 ties met. And then you can make it as a second point that she has only 3 ties, so she is not a UK resident person. So this is how you'll be splitting this whole thing into 2 points for presentation purposes. Otherwise, examiner himself pick it out that where the 2 valid points are mentioned, and then the next thing for the tax year 25-26 is right there in front of you. Clear? Now the time is almost up, though we still have the third question related to section C. But I think I should wind up the session, but I would like you people to drop the questions related to today's session or anything else in general related to taxation. Any apprehension, any further question which you like to ask me, so that we may interact with you people, we may engage you in this question and answer activity. And then the leftover portion of today's session will then be conducted tomorrow. Kindly drop your concerns in the dialog box. Okay, so I've got 2 questions only, that do we need to use Study Hub for practice purposes or Kaplan is enough? See, the first and the foremost thing is that you do all section A and section B questions from Kaplan, though you do have a choice to pick up selective questions out of section C. And if you still have time, it's not a compulsion, but if you still have time, then you may do section A and section B questions from Study Hub as well. I wouldn't think that doing a section C questions from Study Hub is is something which is essential. So Kaplan is must. A and B should be totally done. while you can sort out selective questions from section C. And if you have time, then I do encourage that one must be doing further practice for section A and section B from Study Hub as well. But you will find similar questions over there, as Kaplan also contains the past exam questions, though they have been adapted according to the latest Finance Act. When is the mock? Mock is on 22nd of August. They'll be sharing the details. The institute will be sharing the details further, but it's hopefully on 22nd of August. And I'll be conducting few classes as well before this mock thing as a part of our revision process, for which again the details are going to be shared later. There's a question to confirm the personal pension contribution is used both to calculate NI and extending the basic rate band. Both personal pension contribution and ANI will be affected if an individual is contributing into personal pension scheme as well as the gift aid scheme. I mean, these both two things having an impact on basic rate band extension and ANI calculation. Though when it comes to high rate band, of course, basic rate band is extended. That means that high rate band will be starting with a relatively different figure. And of course, it will be ended on a relatively different value. Then it is said, is it okay if we don't attend these classes because we need to revise? Yes, that's perfectly fine. Will the classes be only for paid students? Yes. Though webinar session 2 is for everyone, this will be conducted tomorrow. But the rest of the sessions, if there is, I mean, they're not quite many, but few sessions for they are to be held for paid students only. Precisely, we have one longer session which we aim for, and that is the grand revision session. And that is it. You will not be missing anything as such. Because of course, in every session, we do emphasize on the practice. And if you have the right medium for practice purposes, I mean, if you are doing practice out of Kaplan kit, then this is the only required thing. So there is like nothing to be worried about. And if in case you're not going to attend the classes, you may have the recording. I'm talking about those who are enrolled. And yes, doing the revision, doing the practice, more practice is enough. These sessions are conducted with an aim so that students may come to know how the question is to be presented. But if you already have an idea, then this is like quite up to you whether you take it or not. Right? Now, students, is there any other question which you need to ask further? You're most welcome. And I will be sharing with all of you the pocket notes as well as the list of imported section C questions. And I'll be sharing a little bit of the planner as well to let you people know that how you will have to structure your last 10 days before exam. Though you are professionals, you may do it on your own very well. Everyone knows about their circumstances, that how they will be dividing their day for preparation and for like doing the other things. But I'll be sharing a simple planner from my side as well. If that suits your work style, then you may opt it. Right? Okay, so the time has come to wind up the session. Thank you so much for being a part of this session. Goodbye.